So this is one of the most common questions that I get asked as an accountant. And that is all around, how do I pay myself? How much do I pay myself? How often do I pay myself? And how does it all work? So we're going to answer all of that today. And we're going to cover it based on what type of business entity that you have. So when you selected your type of business entity when you first started, one of the things to keep in mind is not only tax strategy, but what does that mean for the mechanics and how you actually pay yourself and what you should be doing to stay compliant. And I'll be honest, a lot of entrepreneurs overthink this. A lot of folks are worried about doing this compliantly, so they never pay themselves. They leave all the money in the business and they just know that it's there, but they're wondering, okay, well, if I need money to pay rent or if I need to go shopping or, you know, I need to cover certain costs, what do I do? So we're going to answer that for you right now. So, how to pay yourself as a sole proprietor or single member LLC. This is the most common that I see. So, if you're a sole proprietor or a single member LLC, then this is the most simple thing. And I bet you're overthinking this. All you have to do is move the money from your business bank account to your personal bank account. You could transfer it, you could PayPal it, you could write a check, you could do any type of money movement technique that you would use to move money from one bank account to the other. It is that simple. It is really that simple. And you might be thinking, okay, well, if I do that though, what does that mean for taxes? Do I have to claim all that income? Do I have to claim it if I move it or I don't move it? Does it matter? It doesn't matter because you are taxed on the profit of your business, okay, as business income. So if the profit of your business was, let's say, $50,000 and you want to pull out 20,000 to cover basic personal living expenses. So you have a profit of $50,000 and you pull out 20, okay? That you're still taxed on. You are still taxed on $50,000 because that was your profit. The fact that you moved some of it to your personal doesn't really matter because it's still profit that you made, that you earned that income, right? So just because you took it out and paid for something else doesn't mean that you didn't earn that income. So keep that in mind too, by the way, that whether the money is in your bank account or not, if it's part of your profit, it will be taxed. So my little PSA for you is make sure you've got that money in cash if you haven't paid your taxes on it yet, because you don't want to get stuck paying taxes on money that you've already spent and then not having enough left over to cover that. So remember, as a sole proprietor, single member LLC, you're expected to pay taxes on all of the profit, no matter where it sits in terms of what account it's sitting in. And the reason I'm explaining all that is because when you pay yourself, it doesn't really matter what you're moving between the two accounts. So if you want to take out some money, cover basic living expenses, you can absolutely do that. You just have to transfer the money. It really is that simple. And you're only limited by how much money you have in the bank. So go ahead, transfer some money. If you're wondering though, how much should I pay myself? That is going to be really up to your revenue goals, your profit goals, and your lifestyle goals. You should definitely sit down and do a mapping exercise of, what do I need to cover my monthly expenses? How much do I want to have in savings? How much should I be making in profit? And then dial it back up to, what do I have to make in sales to make that happen? And then you'll be able to figure out how much of that can you pay yourself in order to meet all of your goals. So that's a much more complicated exercise, and I recommend going through that either with a business partner, an accountant, or someone who can hold you accountable to your goals and to make sure that you're being realistic. So definitely look at your own goals and figure out how much should you pay yourself. And just know you have no requirement in any of these scenarios. There is no requirement for you to pay yourself at a set frequency. It's not a requirement. Most companies that we're used to working for as employees pay biweekly because that's a good cash flow cycle. We want to give employees their money every 2 weeks so that they always have cash in the bank to pay their bills. It's just a good pay cycle to follow when you have employees, in my opinion. I used to get paid monthly when I was an employee once, and I hated it. I hated waiting once a month to get paid. The cash flow was much tighter. So we like biweekly payroll, but if you're just a solo business owner, you can pay yourself whenever you feel like you can do it. safely and with no problem. And by the way, if you take out too much money and then you realize that, hey, I think I need to put more money back into the business to invest in something new, you can absolutely inject more business, excuse me, you can absolutely inject more cash into the business by just putting more money in the same way you took it out. So it really is that simple. I would not go crazy taking money in and out and in and out, like, so frequent that it's hard for your bookkeeper to keep up. But just know you have that freedom. So if you've been waiting for permission to go pay yourself, consider this your permission. You can absolutely go do that. Now, let's go through some of the less likely scenarios that are still helpful. So if you have a multi-member LLC or a partnership, my best advice is to look at your partnership agreement, because your partnership agreement will tell you how the partners can get paid. And they can get paid through different methods that we call guarantee payments or through distributions. And what makes it complicated is when you have a partnership, you have to be pretty much working together to figure out when you're going to get paid or to align on how you're going to get paid, each of you. So you have to be on the same page. It is not as simple as we each pull money out whenever we want to. You have to look at your agreement and you have to understand what are the requirements for us to pull money out. Because in some cases, let's say you want to pull out $50,000 and you have two 50-50 partners, each of you would have to pull out the exact same amount in order to do a distribution. So if you're 50-50 partners and you need 50K out of the business, you need to do a 100K distribution so that each of you can take 50. And you have to agree that you're going to do that. So understand that there could be restrictions like that in your partnership. So you really want to understand your agreement. Now let's jump to the S Corp. I know that a few of you are S Corps out there. So the S Corp is a little bit different. What you do is you pay yourself as an employee. Even though you're the owner, you pay yourself as an employee a reasonable salary. And then once you've paid yourself that reasonable salary through payroll, by the way, through payroll, then you can also take distributions of what's called your basis. And that's definitely an accounting term. I don't expect you to know what that means. But you can take distributions of money out of the bank, after you've paid yourself the salary. And distributions meaning just like what an LLC does, just take money out. And the reason why you have to pay yourself this reasonable salary is because the S Corp saves you money in payroll taxes. Instead of paying all of your self-employment taxes for the employer and the employee share that you do as an LLC, the S Corp cuts back on that and results in huge tax savings in the payroll tax department. So I'm telling you this because paying that reasonable salary is crucial. That is how you stay compliant and you're able to save that kind of money, by paying yourself that salary, because that salary is what gets taxed on for payroll taxes. So you need to pay that, and it has to be a reasonable salary, which I will do an entire episode on how to compute a reasonable salary. But just know that you can use market data, you can use any type of justification you can find to highlight what type of salary is reasonable for someone doing what you do. Okay. So we pay ourselves a reasonable salary with an S corporation. Same goes for a C corporation. You pay yourself a salary, but the nuance with a C corporation is if you need more money than what is paid through your payroll, then you will either pay yourself more through payroll, or you will take what's called dividends. And those distributions are not tax-free, okay? So with a C corporation, you're actually paying taxes on your profit and you're paying taxes on the dividends again. This is what's known as double taxation. And it's not ideal if you take a lot of money out of your business. So just understand that if you are a C Corp, you want to be careful how much money you take out of the business in dividends, because you could get hit with double taxes. Okay. So just to do a quick recap, single member LLC, the simplest, the absolute simplest, you just take money out. Partnership, be careful because the partnership agreement will dictate how you get paid. S Corp, pay yourself that salary and then take distributions if you need more money beyond that. And definitely consult with your accountant on how much you should be taking out. And then C Corporation, you can take that salary. You can also pay yourself dividends. And just be careful about that double taxation on those dividends. Okay. So as you can see, depending on what type of business entity you have, there's a huge variety in how you can get paid and pull money out of the business. And if you're wondering, okay, Shannon, this sounds super complicated. I don't really understand how I can implement this or how much I should pay myself. That is where having a trusted professional comes in. We do this for our clients all the time. We'll sit there and come up with their salary for them and set up payroll and do all of this for them so they don't have to worry about it. What's more important is that you're compliant and that you're doing things on a tax strategic level so you don't have to worry about paying more in taxes based on what you're paying yourself. But just know that most entrepreneurs do overthink this, and it's actually a lot simpler than you think. Once you get your payroll running or once you get distributions going, it's a lot easier to judge when and how to pay yourself as a business owner. I hope this is helpful. Let me know if you have any questions. If you do have any questions about paying yourself, or you just want some more help on what this means for you, feel free to text me. My number is 860-609-6374. I would love to chat with you.